Ladies and gentlemen, today I have a story to tell, and the story is very bittersweet. This is very very appealing to see as someone who is no longer in the stock, someone who sold out of the company about a year ago. If you look here, I sold my shares on December 7th of 2021 at about $16 a share, which was a loss, which I did lose about $2,000 on the company. Now, if you look at this, you might think that's bad, but the company has gotten a lot worse. I sold the stock Ttcf, which is the Tattooed Chef, at $16. Today, it sits at $1.71. Today, it's down another 11%. In the past week, it's down 43%. In the past month, it's down over 50%. And then over the past year, it's down about 90% in the last 12 months. We're going to talk about what went wrong with this company because this is an opportunity to look at what went wrong with my investment. Look at how I got out before this got so much worse. Because don't get me wrong, I bought in at 17 and I sold my shares at 16. And that sucks. I didn't make money. I actually lost part of my money on my investment. I lost about $2,000. That's not fun. But looking if I didn't read the writing on the wall, looking at where the stock price is today, if I were selling at $1.71, I wouldn't be losing like $2,000. I'd be losing something like $10,000, maybe more. I don't even know. It would be something ridiculous. Probably more than that, actually, now that I think about it. And this company has went down for so many reasons. One of them being reinstating some of its old school quarterly reports. It's also had to report a lowered share price guidance, a bad earnings report, and then today's big news. And we're going to go over all that today in today's video. So if you're invested in this company, or if you're thinking about buying shares, you might think otherwise. Because we just made a video not too long ago about ELF stock, and ELF stock is one that I'm actually short. It's a very short-term trade. Check out my last video if you want to see it. But this is a growing company. It's overall a business that I think will do well. I think in the long term, while the share price will probably go down in the short term, in the long term the business will do great. For Tattooed Chef, I cannot say the same. And it's so sad to see this. Like I said, it's bittersweet. It's so sad to see this because I used to be an investor in this company and just to look and see how I got it all wrong. We're going to talk in this video the full story of Tattooed Chef, why you should not invest in it at pretty much any price in my opinion, and why I think if you are still holding it, you should probably cut your losses because I hate to say it, but this company's going to zero. I don't think it's going to be today. I don't think it'll be in 2023. Maybe, possibly. But I think sometime between now and the next several years, Tattooed Chef will probably be no more. But thank you guys for tuning in. If you haven't seen me before, my name's Jordan, the Millennial Investor. I have a little over $40,000 invested. Here's my holdings as a portfolio. Here's my balance month over month since starting YouTube, my performance versus the major indexes. If you want to see my portfolio, you can get signed up with M1 Finance, get a free $10 for doing so, and you'd help support me and the channel. But other than that, guys, thank you so much for watching, and let's go ahead and get started with the first piece of bad news for Ttcf, the Tattooed Chef. It says here, now this is going in chronological order. We have news in October and November, and this is where the story really gets bad. Let's go back to October 12th here, and let's pull up the stock chart. If you look here, right around October 12th, the stock price was, let's look over the last 3 months, October 12th was right here. The company was already going down significantly, and it was maybe trying to bottom out. And this news didn't impact it as much as I thought it would, but it started to trend down another 10% or so, and then it slightly recovered, and then we got to today's news. But going back here, it says that Tattooed Chef will reinstate prior reporting periods to address technical accounting issues. This is a major problem because this is something that should never happen from a company. Now, we're going to talk about the quantitative. We're going to look at the raw numbers, and that's awesome. But the thing that's important to notice here is at this company, you can't trust the numbers. When they're constantly reporting bad stuff, if they're constantly delaying their earnings, if they're constantly having to reinstate and have issues with the NASDAQ reporting system, which we're going to talk about in just a moment, you can't even trust the numbers that do come out. So even if this comes out, and it was wonderful, if this came out at $100 million revenue, which beat estimates, that's great, but can you even trust it? Because so far, this company hasn't been able to even report its numbers accurately. Now, this company did reinstate its earnings, and it pre-announced earnings. It was reporting earnings on November 15th. You see here that this says November 10th. 5 days before their earnings, they went ahead and let the market know, hey, guidance is going to be bad, and the company dropped 25% on November 10th, which once again was right about here. The company dropped massively from 440 down to 375, which I know that doesn't sound like a lot, but on a percentage basis, that's quite a bit. That's about 25%, as you can see from the headline right here. Now, that's on November 10th. Following that, 5 days later on November 15th, the company actually reports its earnings. Now keep in mind, investors already have an idea of what to expect. The company has already went 25% down off of the back of their announcement, and going to the 15th, just a couple days later, you can see it went from $3.35, which was already about cutting a fourth of the price it was just a couple days ago, from $3.35 down to $2.74. And let's look at the last month. Let's look at this past week or so, and you can kind of see this past 15th, since the company reported earnings. It closed at $3.35. It opened up the next day at $2.71. Pretty dramatic drop there. And then we get to today. I'm looking at this share price. Let's pause real quick, okay? You see how far this dropped. Off the back of its earnings, it dropped to around $2.50 or so, and it looked like maybe the bottom was finally in. Right around $2.30, $2.40, $2.50, the company might finally have an opportunity to get a breather. And then what comes out today? Tattooed Chef receives notice of non-compliance from NASDAQ. Long story short, they didn't file their 10Q correctly, which is the fancy way of saying their quarterly report. And this goes back to what we saw in October with them having to reinstate their old earnings. Can you even trust the numbers that come out? Now, the funny thing is that whether or not the numbers are accurate, we could sit and debate, but let's look at how awful the numbers are. Their net income. Now remember, this company used to be a profitable company. Right around the time that I invested, in like early to mid 2021, this company was putting up positive net income, a couple $1 million every quarter, including one big quarter of $75 million, and ever since then, it's been downhill ever since. The most recent hitting a pretty much new record low of $38 million for the quarter. Free cash flow has been detrimental as well, other than this one small hiccup where they produced a 1 million positive number, which is basically the one exception. You can see that quarter over quarter, this company generally loses around 20 million-ish a quarter. 18, 20, 14, 11, 21, 35, 30 million in negative free cash flow. Now, this is the interesting part, and this is what's so detrimental, and this is why I say why this company could be looking at bankruptcy. If you look at their balance sheet here, you don't see any red, you don't see any debt, and that's the good part. It's a financially healthy balance sheet. However, when I invested in this company had $185 million on the balance sheet. Now notice that that's about the same price as the market cap, the entire company value today. And if that company still had this type of cash on hand, they wouldn't be anywhere near this low. However, as you can probably tell, they have burned almost all of their cash. $185 million, down to $140, down to $129, down to $92, down to $57, down to $27, and now the most recent quarter, down to $14 million. They have burned over 90% of their cash in a year and a half, in 18 months. That is insane. Furthermore, you might be saying, okay, well, they're reinvesting back into their business, they're advertising, hopefully they're getting lots of revenue growth. If you look at this, and this is the most shocking part of all, analysts still project 16% year-over-year growth and almost 20% growth next year. And you might be saying, okay, this company's reinvesting back into itself. At least they're growing big time, right? Well, they're not. Not only did they not grow, but the most recent quarter, they shrunk 7.94%. And this is what's so important here and why I have to learn from my mistakes. When I sold my shares at 16, it felt like I was losing money. Felt like I had just taken a $2,000 loss and I just made a big mistake. And I didn't let emotions dictate whether or not I should hold on to this company. If I had waited and I said, you know what, the company's going to come back. I think this company could easily recover from its previous lows. And if I look back here, let's go back to December of 2021, right around the time I sold it. I think what was the date? Yeah, December 7th, right here. So let's look over the last year, December 7th, right where my mouse is at. Just literally a couple weeks, maybe like 2 weeks after the time I sold, the company has never been higher since. It's went down and down and down in a straight line, and it doesn't seem like it's going to be recovering anytime soon. So this is something that's important to learn as investors. Invest in companies that have strong moats. Do not invest in small cap companies that do not have significant moats that will make you stay invested in their company. Let me give you an example. If we hop over here to Amazon, Amazon is a company that is one of my largest positions. How do I know that Amazon's going to do great over the next several years? Well, their backlog, which basically means their contracts written, they have $104 billion. I'm going to repeat that just so you understand how crazy it is. See, the blue line here that says AWS revenue? See the red line that says AWS backlog? The backlog is what they have in contract to get paid out over a 12-month or longer period. Over the next few years, even if the company didn't put up any numbers, any growth, no new customers, the company would still receive a contracted revenue amount of $104 billion. Not only is this $104 billion, but this is $104 profitable billion dollars. As you can see, AWS margins generally run at about 30%. So the profits off of that should be around $30+ billion off of this backlog. Salesforce has a very similar story, which is my number one investment. As you can see from my holdings tab, Salesforce and Amazon are my two largest holdings. And if you look at Salesforce, the same thing can be said here. If you look at their long-term RPO or remaining performance obligation, you can see how it's growing over time, where people are contracted to pay the company money, whether they like it or not. Tattooed Chef is not that company. Unfortunately, they have to rely on people hopefully going back to Walmart and Target and buying their product. And now that they can't advertise, what are they going to do? They're going to shrink in revenue. They're going to burn through their significant levels of cash. And I'm honestly concerned whether or not this company will be around in a year or so. It's a fun stock to look back on and reminisce on and just think about the mistakes that I made. And I made so many awesome lessons in 2022, and this is one of them. Now, I have become a better investor since then. This was well over a year ago, the time that I invested in the company. And I've made a lot of important decisions, both in my life and in my investing career, that has helped prevent errors like these. So stay tuned. Follow me for more. If you like this video, subscribe. Get signed up with M1 Finance for free $10 if you haven't already. But other than that, guys, thank you so much for watching, and I'll catch you guys next time.